TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 3rd wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstances of these markets. We get to go figure out, as if we need to, what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got you covered. All you have to do is let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, and in the den, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow up 160 points. 26,933 is the print. S&P's up 13. She's printing out at 29.36. The NASDAQ 100 up 0.5%. That's nearly 40 points. Russell is up over 1%. That's $17 and change. The semis are up 0.75%. That's $10. So it's mean and green across the board. Of course, the spot volatility index well below its 50-day exponential moving average. That's trading at 11.43. Gold's back $4. Silver is flat. Light sweet crude is up 90 cents. She's trading at 76.12. Leading the charge, the upside dollar-wise, $12 to the upside is SVB Financial. Tilray is up 11. Boeing is up 7. Biogen is up about 7. The trade desk up 6 and change. To the downside, it is Acuity Brands, AYI. It's the ticker symbol. It's up nearly 14% or $21. Amazon is down $11, about 0.5%. Ligand Pharmaceuticals, that's off 8 or 3%. Tesla down 7. Intuitive Surgical down about 7. Buckaroonies. First question that came in, it was about 2 o'clock this morning, and so I wasn't around to get it. Came in from Leo. Now, Leo is asking about a ticker symbol that is on the Australian Stock Exchange, Northern Star Resource. So, Leo, I do not have access to that stock exchange data. I'm not paying for that stock exchange, and therefore I can't really look. So, Northern Star Resource did find the Northern Star Resources on the over-the-counter. Maybe this is the same. Maybe it's one of the same. Maybe it's not. Ticker symbol here is NESRF. And your question was, is this thing headed to $11? If we just simply take, it's really limited data here. This over the counter, this is, or if you don't know, it's not a whole lot of volume really. This is a monthly time frame chart to look at. It does have the A to B equals CD pattern. Looks like it's next headed to, if this is the correct equity you're looking at 675. The next A to B equals CD. Price projection after that is at $8 So my apology if this is not what you're looking for. Again, I don't have, I'm not paying for the exchange rights to go take a look at the that ticker specifically, or that entity on the on my system out here, Northern Star Resources. We've got other questions that have come in. In fact, there's kind of two back-to-back dealing with the same thing. One coming in from Robert B. Robert says, has the trend changed for the Russell 2000 and the XLF? The reason I'm asking is because I'm considering taking a long position in these ETFs. So we've got that. And then we've got Lee B. I'm still trying to figure out the Russell 2000. Up big today on high volume. What level do we need to close at for this to be a real reversal, or should I just cut my losses and move on? Cut your losses. Oh, in at 168. Okay, so I think the signal that this may be a bottom took place just as we came on the air at 1 o'clock. So subscribers and I are, and then you as well, and everybody else out there, taking a look at the, so in the Russell 2000, you know, as we looked at this yesterday, as things were headed lower, and we said, look, we know how bottoms form out here the majority of the time. And the majority of the time that they form, what they're going to do is they're going to show up on Stevie's black box system. That's this little tool right here. And it'll give us topping and bottoming signals on a intraday basis. Now, at some point in time, they fall off of this. And early this morning, or really it was late last night when it began, well, it was at midnight, I believe it was when we got the first signal that the Russell 2000 may be forming a bottom. Now, this is the hourly time frame chart. What was that say? Oh, I take that back. That was at 4 o'clock yesterday as it came into the close. Why? Because price was moving lower, doing less relative energy out here. So this is for both Lee and for Robert, you know, looking for a bottom out here. And what formed during that candle session, we're looking at the 60-minute Russell 2000 equity futures contract, was a nice hammer candle. Now, a hammer, the meaning of it is telling us that it's trying to hammer out a bottom. Now, candles by themselves, unto themselves, don't do you a whole lot of good. They just kind of tell a story. And I'm good at telling a story out here, or fairly good at telling at least a story about the market. But where they really become of value is at the completion of some type of pattern. Maybe it's native B equals CD. Maybe it's a Gartley pattern. Maybe it's a butterfly pattern. Maybe it's Stevie's Rhodes momentum indicator pattern. Maybe it's a seventh wave move. Some type of pattern out there. Maybe it's a Tom DeMark setup 9 count. Some type of pattern. So you got that. What we had going on throughout the entire evening and then up until about 6 o'clock this morning was just a trading with inside its market profile. So Lee and Robert, we really didn't have a clearer message as to what it wanted to do, form that 9 count. Typically, we see some type of change in trend. And in fact, that's what we saw take place at the open this morning. And then as we began 11 a.m., what price did was it came right back to that Tom DeMark short setup trend line out here, that little red dash line. I mean, right to the T. And we had a brand new profile. Now, at 12 o'clock, at noon, price had closed above the top of that box. So that was clue number one that, okay, this could be a real bottom inside the Russell 2000. The second clue came right here at 1 p.m. as this candle closed out here. And the reason is because the last bastion for resistance on a 1-hour time frame chart was that Tom DeMark setup. That was from the bar at 11 o'clock yesterday, and that high was 1676. We're trading at 1678.20. So would I suggest that you jettison your long position? Absolutely not. Does this mean this is going to be a significant bottom? It may be. Yeah, it may be. You asked the question, and so Robert, there's your answer. So you go ahead and absolutely take a stab at it. It could be just a counter trend rally, but we won't know. First of all, that pattern makes great bottoms out there. It's a great signal. If you're trying to buy something, you know, you don't want to buy lows. You want to be able to buy a bottom. Well, there at least you have something working for you. With regard to the daily time frame chart, all we know is that price got below that TD setup 9 count, that red dash line yesterday. Boom. It's right back above it. Now, looks like where this is headed to is 1699.30 to 1705 before it releases that next piece of information. Was this just a counter trend rally or not? I don't think so. Steve Rhodes with TFNN. Right. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, so, I know Robert had asked about the XLF, and he was looking to buy that as well. Trade out at 28.02, up 33 cents. Volume behind the move today, 45 million shares. So, Robert, we're going to look at the daily time frame out here to try to answer that question. And here's our daily, weekly, and monthly. Actually, we're going to look at 3 different time frames for you. And here's what we know, at least with regard to support or resistance. Inside of the daily time frame, what price is doing is trading below support. And that would be the bottom of its box, 28.08. The high today so far has been 28.06. So I would, if price could get back inside that box, then you'd at least get up to 28.41, and I'd be able to say, okay, maybe it is a bottom. And the reason is because the weekly time frame chart right now is back above the top of this box, which is 27.84. And on the monthly, we're trading in between. So that doesn't really help us a whole lot out here. What does help us, though, is the following. If we take a look at the daily time frame chart out here for the XLF, we can see that just a few days ago, Stevie's red line, which was green, actually turned red. What that told you and I was its price oscillator dipped below zero, or is trading below zero. It is trading below zero right now. We know that just simply because of the color of the line out there. Now, when that occurs, when you get that crossover, what you typically will get is a test of that line, a test of, in this case here, a test of resistance. Now, if resistance fails, which would mean that price would close above 28.11, that would be your next clue that, okay, maybe there's a bottom. See, there's no pattern here that you and I can take a look at. There's no A to B equals CD pattern. There's no, like, I don't see where it's coming back into support. There's no time to mark setup 9 count. There's no nothing here when we take a look at the XLF. But there is a pattern, right? That pattern is being able to take a look at where it's trading, knowing that its price oscillator is at the zero level. So I think you have to sit on your hands on this one because it could just, in the XLF, could just be a counter trend rally up to about that 28.11 area. And if it tests and rejects it, well, maybe it's setting up an A to B equals CD to the downside out there. So the Russell 2000, the hourly chart, is saying, yeah, it's got further to run. The XLF, you and I, we're just simply not certain about that. So that takes care of all the requests. So please, let those fingers do the walking. Send in a request or two. It just simply makes it a whole lot easier. In the meantime, Let's go take a look at some oddities in the market out here. And I do mean oddities. What do I mean by oddities? Well, look, one thing you and I know is where the global flow of capital is going. This is a daily time frame chart for the Dow Equity Futures. We can see that it has cleared resistance sort of by a mile. 26,820 would have been resistance. It's traded at 26,934. I'll call that breaking resistance by a mile. But I'll especially say that we take a look at how the Dow is trading in euros, yen, and pounds. New all-time high. We're at new all-time highs across the board. This is where the capital is flowing. And what does that mean? This means we could be in one of these truly vertical markets that just continue to pound up higher. Not climb the wall of worry, just simply continue to pound higher for a long period of time to come. Now, what's odd, what's strange, maybe, is that there's some things out here that maybe aren't confirming that. And this is what I'm trying to get my head wrapped around. The problem is we don't see these vertical-oriented markets very often. So we really have limited or none, or just simply have to go back to historical charts to try to figure out how it is or what tools we could have used to have traded those markets, because they can be even trickier than, let's say, a consolidation. In fact, way trickier than a consolidation. Look, I get emails all the time from people that just say, you know, I am just full of it. And there are days where that certainly is a true statement. But what I'm not full of is providing you with bad information. And I recognize that there's a lot of people that say there's just no way this market is just simply going to crater at the top, and we're going to see, you know, just a huge decline. We're ready. We're in a bear market. That's what people. Somebody told me we're in a bear market. We're at all-time highs in all currencies out here. I got to just slap myself upside the head and say, what are you looking at to possibly even suggest that? It's just like and they're serious about it. Now, I'm not attacking anyone, although it sounds like an attack. I'm just saying I understand the other. I look at both sides of that trade out there. In fact, looking at both sides of the trade, that's the oddity. If I do take a look at the New York Stock Exchange, its advanced decline oscillator is well below zero. Hasn't really budged a whole lot. What does that mean? That means that the market breadth inside the New York Stock Exchange is kind of horrid. It is, if horrid is a word out there. It's one that I'm using. So that always makes me say, something to think about. It's been like that now for a solid month. Well, tomorrow, I believe, is a solid month out there. But the spot VIX index is below the 50-day exponential moving average. And that just simply says liquidity out there. What else do we have? What else we have is, and this is where I've been rebooting my system, sort of just calling John Logan and saying, hey, is something turned off out here? What's going on? This is the S&P 500 and the market breadth for it, which still shows at 1:24 in the afternoon that there are 131 equities inside the S&P 500 with price above resistance, the top of its box, and 140 with price below the bottom. We still have not received that bullish crossover, a bullish crossover, as an example, that took place on May the 7th out there, or one that took place out here on July the 5th and ran for quite a while. And we just don't have that. And I am literally scratching my head trying to figure this out. The problem is some of these tools, such as even the New York Stock Exchange data, I can't go back and take a look at the two vertical markets that we could look at inside of the Dow, the 2000 move and the 1929 move. Now, maybe there's others out there, but those would be the two most popular. And so, for example, what I've been spending time doing is trying to find a set of tools that we can rely upon. Here, by the way, is a monthly time frame chart for the Dow, and this goes back to 1896. You and I are really just interested in looking at the bottom that came in 1921 as an example, because from 1921 on, this thing just blasted higher, utilizing the same set of tools that you and I use right now to take a look at the chart for the Dow. For example, here's the current chart for the Dow, and on the monthly basis. Now, I don't typically have profiles on a cash index out here, but I've had to resort. I don't have an equity futures contract for going back into the 1921 time period for the Dow. So I've said, all right, I've got to apply this tool, see if I can find something. Several of the tools, and here I've got that time to mark set up. I've gotten rid of the sequential count and the I've gotten rid of sequential count, and I've gotten rid of the combo count out here, and we know how often these 9 counts end up identifying turns in the market. What a turn in the market means, you come down to support. That's what exactly was taking place even back here as the market came off the bottom in 2009. It gets that little 9 count out here in January of 2010. Market moves sideways, pulls back, tests Stevie's red line. Takes off from there. You get to another 9 count back here in May of 2011. What does price do? Comes back, in essence, tests that market profile out there. Gets back above it, makes another 9 count, comes back and tests Stevie's green line out there. You kind of get the feel. Where are we at right now on a monthly basis? Yeah, we're only in maybe count number 3. And I come back to this time frame here in the 1920s. Something to think about. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 145, S&P is up 12. A couple questions coming in from the Tiger's Den. The first one coming in from Peak D and wants to take a look at ticker symbol KNDI. That is Candy Technologies Group. I don't know what they do, but we have the daily, the weekly, and the monthly timeframes. And the question is, let me make sure I go back and get the correct question out here, is what would be your target for Candy? And would you add to a position? Thanks. So if we take a look at just the day's activity, okay, Peak, There's nothing, we always like to say, I like to say, there's nothing more bullish than a failed bearish pattern. And that's what you're seeing take place today. Now, let me show you what I mean by that. And I'm really referring to the market profiles as an example. So see the current market profile. This was a bearish structured profile. What I mean by that is the center of the box. Now, at the center of the box, you've got both buyers and sellers believing there's fair value in that range from a daily time frame trade. And that was at 523. But you had sellers just above, up at the 569. So it said that sellers were like, okay, to the extent you're going to be selling a $5 stock, just kind of go with me in theory here. Don't ever short a $5 stock. You're going to get, don't do it. Save, go buy some candy. Don't do that. But we can still utilize a set of tools to be able to help us interpret what the meaning behind the price move is. And so, and 408 was a level of support. Well, today, candy is taking off well above that 569 level. The volume behind its move out here today is 1.8 million shares. It's taken out a swing point that at 1.6 million shares out there. So that looks really good out here. And this thing wants to move to higher price. Now, I know your question is, or was, or is, what's our price target? So from a price target standpoint, we got to, and if you're asking me, wait, where do you add a position on candy out here? Shoot, 529 was the number. I say 529, just using Stevie's green line out here. See how peak when the oscillator and change line turns from red to green out here, and what it tells us is that we should see a test of that line and price. Now, in this case here, it took a while. It took from September 19th till September 27th. But see how that retracement back into the line, and it did that on really 4 days out there. That was your signal. The price oscillator is above zero. There's nothing more bullish than a rising price oscillator, just simply from it just doesn't get more bullish than that. And that was really your buy point area. Now, will price pull back to that line again with today's type of volume and clearing that swing point? I don't think so. Do you jump on the momentum trade? Do you add to your position if you're in one already and you're going to average up? Then, yeah, you could do that. Even in the weekly time frame out here, this thing is trading well above resistance, and it has been since September 17th. So you could have used the combination of price pulling back on the daily time frame to that level of support, Stevie's green line out there, red line, and the fact that price was above the top of its box out there. At least that's how I would do it. So where's price headed to? You have to go back. You don't have to, but I would go back to this high volume weekly swing point out here from October 2nd, 2017, and that's in the range of 990 to 575. Well, we're at 648. We're trading inside it, albeit lightish volume. Still, it looks to me like that's where it's headed to. So you have to make the reward risk on that, because the buy point is kind of passed us by, so to speak. And only on a pullback, could I give you that? But if you're in a position you want to keep adding to it, you just got another breakaway candle session today. So I hope that helps you out. We had another question inside the Tiger's Den. I think it's a great question out here. It's a super question. And it's the question that, in essence, what it does is it encapsulates that thought process of the bullish and the bearish mindset and the stuff that we each have to interpret that as we turn on a television set or radio and listen to just the literal garbage. But each of us are hooked to it, right? And so the question is this. It says, Steve, can you discuss how the market may act if the Dems take the House, or in essence, they take the Senate? Will that change the bullish setup in the markets, or does the question get too political? And the answer is, well, first, it doesn't get too political. I think it's a great question out there. I'll stay out of the politics, but let's just assume that happens, because what people would believe, or people would think, is if that takes place out here, that oh my gosh, the markets are going to fall apart. What I want you to do is I want you to think of it like this. I want you to think of it as go back to Jerry Maguire, who would say, show you the money. All this great technical set of tools that we use out here, which, by the way, I think they're great, and all the things that we do, I'm reaching the conclusion that the single most important tool, you got to understand, I have spent thousands and thousands of hours and dollars to be able to have this technical know-how, to be comfortable, to be able to come out here on a show and, answer Pete D's question, hey, where do I think something's going? Or where is support? So we do that all the time. But I really believe that the most fundamental thing to answer that question is you just have to follow the money. And the question is, where is the money flowing? And again, we show this every now and then. Showed it yesterday. Here you can just simply take a look at, now this is in terms of U.S. dollars, but you are looking at the largest markets around the globe. And when you take a look at these markets, which market is breaking out and where is all the momentum? And then what we can do, Barry, what we can do out here is we can then take this and say, okay, the Dow is breaking out. And the Dow, you have to consider the Dow to be, there are technicians that trash the Dow and will say things like, but it's only 30 stocks and it's cap weighted. How often do you hear that? And you know what? That's an absolute true statement. But what they're really not doing is they're not taking a look at how is the Dow trading around the globe. How is it trading in the local currencies, the global flow of capital out there? Because when the Dow is the big guy, it is where the international money is flowing. The S&P is in essence where the institutional U.S. money is flowing. And the NASDAQ and the Russell, that's kind of like for guys and gals like you and me out there. Okay? Now, not that institutional money doesn't flow there, because that's not really a correct statement. Wealth managers will know that many times they're using, different groups of the Russell 2000 in order to go ahead and put their clients' portfolios mixed up inside of those things. But Barry, the most important thing is, where is money flowing out here? And where it's flowing as we speak right now is into the U.S. markets, and it is certainly into the Dow. The big guy's going. The big guy has now cleared resistance in terms of U.S. dollars. It hasn't really done that since January out here. And no, it doesn't matter what political turmoil we're going to go through, money still has to flow somewhere. You think that it's just, and we'll see if it doesn't, okay? So should that unfold, we'll be able to take a look around the globe and see where assets are trading in those major currencies out there. But money's going to be put to work. And right now, this is the best of it. You got to celebrate this. Got to overcome those fears. Yeah, party like it's 1999. For like the next 12 years or so. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So just to follow up, as a follow-up to that question, it's easier if I just kind of show you the money out here. And if we take a look at, and I want you to look at, this is still that same chart we were looking at, only I pulled it back. And why it's just so important about, how an instrument, especially a large instrument, especially the Dow, the S&P and so forth, the gold as well, how it's trading in these major currencies out here. Because look, if you're investing in something in your currency, you want to be able to have that make money in your currency out there. And the same is true. We're in a one world market, more of one world market than we ever have been. And it's going to get even faster and faster and faster with regard to the information and how people utilize that to go ahead and try to make money. You can't hide these days. If you take a look at the top in 2007, you'll see the red arrows out there. You'll see that the markets will top in all major currencies at the same time. Okay, yes, we are at highs inside major currencies right now, but don't interpret that to mean that it's going to top. But you will see that the Dow moved lower in all those currencies at the same time. The same thing will happen. So for those that are taking a bearish outlook and want to say the Dow is only 30 stocks, one, I will say you are correct. And say the Dow is cap weighted, I will say you are correct. So what? It doesn't matter. What is the Dow doing in all of the major currencies? What is that trader sitting over in Tokyo or Osaka or Kyushu looking at? All-time highs, breaking out above resistance. What's that trader over in Great Britain who knows they've got Brexit coming up, okay? They're making money off of the Dow in their currency. They are not sellers. They're natural buyers out here. And how about the folks over that are trading in euros? They're sitting in Paris. They're sitting, somewhere over there in their currency. They're like, this is wonderful. All the problems that you've got in Italy, all the problems that you've got in Turkey, all the problems that you've got with the ECB and whether they are going to NQE, raise interest rates, whatever they're going to do, you think we've got problems. They've got huge problems out there, right? So all the money is flowing. We now know where the money is flowing out here. And right now, the party is really just about to begin. Because you and I were U.S. dollar traders, and we are now just seeing price break above resistance levels, joining the big party out there. So the point is, whether it's in November of this year or whether it's 2020 or whenever it might be, one thing we will see is we will see these markets trade lower in all currencies and continue to move forward like that. Whether it is in the Dow, or whether it's gold. Here's gold. Here's the daily chart for gold. Take a look at Goldilocks out here. Take a look at how it moved off of its highs out here from, back in the June timeframe. Was it moving higher or lower in all currencies out there? Exactly. It was moving lower in all currencies. So even if it looked like gold was pulling back to a level of support in U.S. dollars, it wasn't. It wasn't like we had gold moving higher in yen or gold moving higher in euros or Great British pound. And just think about it. Look at bonds. Bonds are getting trashed in U.S. dollars today. Well, here, I'm sorry, that's the interest rate. So the interest rate, we're taking out major resistance out here. This says if this holds, we're at 330, holds would be above 325 come Friday. We're looking at 360 out here. If we do take a look at bonds, big wide-ranging bar to the downside. It's trading lower in all currencies out here. Where our bonds headed to, they're headed back at least to their swing point from May 18th, and that's at the 138.17-ish area out there, and could easily, you could easily get there today. Huge move, but there's no buyers out here that we see. There's no buyers in any of those local currencies. Remember, we just looked at the Dow, same daily chart in these currencies, and the Dow was moving higher. And bonds are not moving higher. Not at all. Not one iota out there. So I don't want to belabor the point, but the reality is I do want to belabor the point. And that's the thing that you and I, which we don't have enough evidence of yet, is do these other patterns. This mere fact the New York Stock Exchange is kind of in the hands of sellers because its advanced decline oscillator is below zero. Does it matter? Does it matter? And it may not matter. It just may not matter. Does it matter that the S&P still hasn't had a bullish crossover in market breadth? It just may not matter because the flow of money is just too great to deal with those types of issues out there. So I think it's a great question. I love chatting about it. I love somebody telling me the other side of the story. But what's cool about just following the money and the asset priced in those major currencies is you don't need to be a technician. So to a certain extent, I'm putting myself out of business here. You don't need to be a technician to watch that and figure that out. And that's probably the beauty of it, okay? Because the beauty of it is then at that stage, your decision-making process gets a whole lot easier, especially for your longer-term retirement accounts out there. And at this stage here, there's one thing that you and I know. If you're a person that believes in the A to B equals CD pattern out here, just at a minimum, if you believe in that, then what you and I know is that these markets are headed way higher, way higher. If you take a look at the S&P, just as an example out here, well underway with regard to the A to B equals CD pattern, it doesn't make the one-to-one level until you get to 3278, and it is not going to stop there. And the Russell 2000 has had a little pit stop. Looks like maybe it has formed a bottom out here because it's headed to 1896 and 2155 out there. It's just the A to B equals CD patterns out there. And a lot of people choose to ignore this type of stuff. Again, you just come back to how our assets around the world performing in U.S. dollars. You tell me where it is that people are really enjoying themselves. It's right there. Okay, enough of that. Let's go to Susanna's question. She says, Steve, thank you for all you do for us. Would you please run your analysis on GDX to go long, support resistance, Stevie's red line? That is Susanna from Canada. So let's go take a look at it out here. The one thing that we know, so first, Susanna, we have to make, you have to make, each of us have to make a decision about what gold is doing out here. So we had shown the gold chart in all these currencies, all these major currencies. I'll expand it a little bit so it makes it easier to see. And so the one thing, now I'm not showing you the chart here, you just, and I've shown it many times, so hopefully, or just trust me on this, that the GDX basically follows the directional correlation between the GDX and gold is, it's spot on. So we can't argue about that. So the only way, or primarily the majority of the only way that gold or the GDX is going to move higher, and I'll give you the other data you want, is if we see it moving higher in all these major currencies. It is moving higher in yen. Yen is sending out a RSVP invitation again, okay? But they're the only ones that are really enjoying it. In U.S. dollars, Susanna, which is really what you want to see, gold has to close above resistance. And there's a couple of levels out here. I would say the first level is 1214.50. The second level is 1220.70, and the third level is 1233.80 out here. It's just not there. Well, let me give you that date about the GDX when we get back from this breakout here. Hey, I'm still along the GDX, but not big time or anything like that, just as a trade. Steve Rhodes with not the GDX, the Nugget, and one of the other ones. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back. So Susanna, in the Tiger's Den, they said that apparently there's a tariff because of the USMCA, right? United States, Mexico, Canada agreement out there. A tariff on the no tariffs here. This is free trade. So if you're going to trade the GDX out there and you're wondering where Stevie's red line is, right now it's at 1826. So if you're looking to get long, a pullback, you're trading at 1889. Let's go with 1826 as a likely buy spot for you. If we take a look at market profiles, we're trading above the top of the daily box, so 1860, which is what you're looking for. That too could be a level. We do see slightly higher highs and slightly higher lows out there. The weekly's not going to provide us with a whole lot of information, and if gold craters, then the buy probably on GDX is around 1610, the bottom of its monthly profile. So that's what I would be looking at. I would sit tight right now. Earlier we showed you Steve's black box signals out here. You can see the 1 hour time frame chart for gold shows a top that is confirmed, and so you really need to go take a look at the 1 hour time frame chart to kind of get a feel for has this thing bottom? And the answer out here, we can see the top. The answer is no. I don't see a signal of a bottom. I see a continuation of that Tom DeMark setup 9 count that took place. We're only in count number 4. We are in number 3 as far as a Chapman wave count to the downside. So I don't see that. Gold could easily pull back to 1192 using this 1-hour time frame chart. If it clears 1220 or 1208, then I'd say, okay, bottom is in. But we don't have that signal as we speak just yet here at 1:56 in the afternoon. So I hope that that helps you out. Folks, hope that today's show helped you out, at least maybe clarifies why we're in, it appears, an absolute vertical market. And none of us really know how to trade it. So we're going to need each other. That's the way I'm looking at it. Thanks so much for being here. Stay tuned. David White's up next. After that, you got Tom O'Brien. And I'll be back with you on terrific Thursday, oftentimes thirsty Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com.